Wow, do we have a lot to go over? Let's get to the basics, and then we're going to drill into some of these earnings. Some of these names are up over $100 after hours. Some of them are down $100. So I want to go through those. I want to do this early while it's fresh. So this will be short, sweet, and to the point. And if I get it out early enough, there should still be some after hours for you here to act on. But let's get to this. First and foremost, the SPY. This is what we refer to as a control bar, the S&P 500. If you've been watching these videos for some time, you know I refer to these as control bars because they are in control. And as long as you're in that range, it is what it is. Easiest thing to do with these is actually just drop a volume profile on there. You can then go into a shorter time frame. It'll tell you exactly what's going on and show you exactly where all the players are. It's kind of crazy how easy it is to see this once it's on. Like you can't actually unsee it. We'll get rid of the pre and the post for a second and then drop it. You can see how you're trying to ride up here, but realistically, it usually pulls you or tries to pull you back into here. And the last thing you want to do is when you're up this high, have it drop down. Now, I want to show you something that I find very helpful. So you can see that you need to hold up here. Whether or not you do, I'm not really sure, guys. I'm just being blunt. Like, I really don't know. And usually I have a sense of which way we're going. With this, I thought this was just absolutely fascinating how you stopped here. You're getting out of the second tier names. We're going to have to go through that. You're getting into primary names. The big dogs, in other words. And we'll go through that and what's going on after hours. You had some secondaries after hours that are just tanking stocks down 20%. Got a lot of volatility going on out there right now, and I want to get to it so that you guys can be prepped for tomorrow. So let's do it. As always, subscribe, click all notifications. Everything we do here is timely information, education, not financial advice, as you guys already know, but let's just do it. So we try to get back up here, and you can see that 673 Matumboed over and over and over again. Right now, we're going to try to see if we can get through the 670. Are we going to hold? Are we going to break through? We just don't know. Look at the RSI. This was pretty interesting because you couldn't really get out of your own way, but you went flat. Watch when we look at this on the 4 hour. You popped down and then you did try to rally, but then you're flatlining. Take it to the hour. You're overbought on the hour and it's getting tired. Now, I don't use the hour, but this is what I have. So sometimes you have to play the hand that you're dealt. And I have the lower high there and I have the higher high there. So from a data point standpoint, it's not great. It's not something that I'm doing cartwheels about up here. And this is something that we have to pay attention to. Also, complete utter lack of follow through on names, guys. Like complete utter lack of follow through, and it's definitely something that I want to go through with you guys a little bit. And even on the second tier stuff, like that usually would have that follow through day, you're just not getting it. So we're seeing how we're acting up in this level. That's definitely an issue for us. Definitely something we have to pay attention to, and it's certainly something that I'm looking at. I don't view this as the best thing that could possibly have happened today. I would like to have seen us get through this. If I had to find something in the SPY to like, the XLF, you did make a higher high. You are trying to push, but once again, you're getting rejected by Wednesday's bar, and you're unable to get over Wednesday's bar, and then here's Friday's. You're not even trying to get over Friday's yet. What I tend to do with the mark, I like to see where the mark is, and then I will drop a fib to here. Now, once that fib's dropped, I'm not interested in the fib level so much as the 50% line, and I'll show you why. Because I want to see how many times we closed as a net buyer of financials. And I'll show you what I mean by this. So this is the control bar clearly until this one came in, and now this bar is in control. We had one close over, got over it, broke the 50, tried to break the 50 from this bar, and you see how we rejected? See how we hit there? So you still are, even though you're up, you still are a net seller since Friday of the XLF. I know it doesn't look like it because people won't understand this. They don't mark these bars off. Because when you mark that 50% line, everything one way or another, net buyers, net sellers since here, it's not rocket science. If you can't get over the 50% of the control bar, it's pretty clean. And here it looked like you were going to go. They reversed. Now you tried again, complete rejection. And now we have these rising 3, falling 3 patterns. Down, up 1, 2, 3. You know, you undercut tomorrow. That's about as bad as it gets. I'm not sure that you are because some of these names that had earnings tonight absolutely crushed. And we want to see that. We want to see that kind of crush on these earnings. Some of these names that were supposed to be disasters, they're crushing. You have Capital One doing a buyback, for God's sake. So, but you are below the 55, and it has been 5 days. And when you're below this for 3 to 5 days, that's your trend. So your trend on the XLF is below that, which leads you to where the SPY is, which does put weight on us, and we have to acknowledge that weight. You can't pretend that it's not happening, right? We have to acknowledge that it's happening. So I think that is super, super important to get. If we take a look at the SOX and just follow through here, the SOX is absolutely 100% grinding along, but we still have some of these other things that we have to concern ourselves with. And I just want to go through this again. This is going to be the New York Stock Exchange. And we're going to do it. Let's do McClellan. And then from there, and we'll just look at McClellan because I think it's important. We are starting to try to turn, and it started today. Now, whether or not you do or you don't, I don't know, but I want to just show you this because I've been on this for the past couple of days. This is a real concern of mine. It's impossible for the market to go up if this is going down. It just won't stand. What's happening here is that you're getting so many yearly lows and so much negative breath that you're getting to the point where you can start to turn. It's like that bad, right? And that's what I'm trying to see. Now, when you get to 500, I'm going to mark this off because I always found this interesting. 500 is a level. The way that this is written, 500 is a level for whatever reason that when you get to that, you still will see some of these bounces in there off that negative 500. I don't know why it's that level, but you will see some bounces in here, some retraces, and then you can even see from this negative 500, watch this negative 500. And then watch when I drop a pin there and you'll see it undercuts it, rallies, tests it, rallies, tests it, rallies. For whatever reason, those negative 500s, when they hit that level, it becomes a thing. And I'm not really sure, I'm really not sure why that is, but you can see it in here as well, negative 500. These are turning points in the McClellan, and we do have one today. Now, does that mean the breath is going to get better? I don't know. This is the hand that we're dealt right now. I can only show you what's going on right now. And from the secondary standpoint, you're getting rid of the garbage. And I know people are going to be like, it's not garbage. It is. And you're getting rid of the garbage and you're going into the quality names. This is exactly what you want to see and why this is going on. You are getting bidding wars on some names. That shows health of market and that people want to commit capital to market. Just remember that as we go to the next thing that I think is super important. Now let's talk about the breadth of the market because realistically, the breadth of the New York Stock Exchange on McClellan just started to turn, like literally just started to turn. So up top, we have S5, FI. You can see that's at 49.6. That means 49.6% of all names we're still under. Look at the NDFI and what's going on there. All right, so that NDFI is at 59.40. So that's as yesterday, so you're lifting. So large cap names on the NASDAQ are lifting. And you will remember that I walked through this before and how you can go NDFI and create this. Well, you're supposed to be able to create it. Let's see what they are doing wrong or what I did wrong. And you're gonna have to bear with me, guys, because in between all this, I have a lot going on. So what you want to see here is you're looking for these turns. Do we have it yet? Not really, no, but they're only calculating this from Monday. So we're just gonna have to keep watching it because right now, this is still imploding and it's still coming down. We always talked about how these rally up and they give us those inflection points. Right now, it's not giving us that, but the NASDAQ is better, hands down. And we can see it through the small caps too. Now, we showed this the other day, and what it is NQ. These are small caps divided by the larger caps, the NDX. There's a couple different ways you could do this. You could do this divided by the Mag 7, and you'll get a completely different chart. But if you take a look from Friday, October 17th on, you can see that we're trying to regain this. It's not really working. As a matter of fact, what's starting to happen from Tuesday the 21st on, which obviously is today, you can just see that you're completely underperforming yet again. So this is definitely something that we want to keep our eye on. If we take a look at it this way, you can see divided by the Mag 7 that you really bottomed out around that August 11th, and then you would have periods of outperformance from like August 11th up to September 2nd. And then from there, from September 2nd all the way down to the 16th, you had these battles. And now you're having these internal battles where small cap versus the Mag. And the Mags are definitely winning now. I don't think that's anyone would really second guess that. But let's get to that and let's talk about why that's happening. The very first thing that we have to understand is the Magnificent Seven gets bought when they start buying the dollar. They are starting to buy the dollar again, and as long as they are continuing to buy the dollar, you will note that you'll start seeing the Mag 7 will start turning right around the same time. Real easy way to see this is just literally just put in the Mag 7 and then you can't miss it. And there's a reason for that, really. That's the Mag 7. Yep. So let me go to this specifically. I want to show you this on the hourly because I think it's a lot cleaner. We'll drop the line in and we're going to have to deal with the wacky line. But you see how that moves? I mean, it's almost in tandem to it, right? And again, what you're seeing is you're obviously seeing that peak. You're seeing the bottom in the dollar. And then from that peak, you're seeing it come over. Why is that? It's important to get this. The reason for that is simple. The reason that it happens more than anything is because when the dollar stabilizes, people that have these enormous swaths of capital that are overseas will come in here and they'll invest in the US stock market, not only the bond market, but the stock market. They don't want to lose. If you get stability, they don't mind if you have fluctuations in the market itself or the fluctuations in the bond market, but they're not going to lose money on the currency itself and on the underlying equity. That's what happened in April and why April was so bad, because you had Norwegian banks that were blowing out of NVIDIA. And they didn't own NVIDIA because it was going to be a great company and this and that. They owned it because they're like, oh, this is a stalwart. It's tied to the dollar. The dollar is stronger versus our currency. Therefore, we're making money on the currency and the capital is parked over here. And they do it from an asset allocation standpoint. That's why it's moving the way it is. So stabilization in the dollar will lead to more defensive technicals. Now, more defensive technical names are going to be the Mag 7 right now, especially when you go into earnings. And we're starting to see that play. So we'll take a look at it for a second and you'll get it. And then we're going to go through a couple names here, but I want to get a little micro here on some stuff. So for example, Amazon comes out and shuts down half of the world's internet and the stock's now up $12 from that. Well, the only reason for that stocks go higher is what? Because somebody's buying it, clearly. And the people that are doing that are buying it for two reasons. One, you're going into earnings. Two, the stabilization of the dollar. But you're seeing this everywhere. You're seeing it in Meta. If you look at Meta over the past 2 or 3 days and the stabilization of Meta, and then you tie something like that to the stabilization of what you see in the dollar, it's not a coincidence. Apple obviously has an orange phone, so that means that it's going to keep going. I make jokes, but I do own Apple. Google dropped because someone came out with, yep, you got it, a browser. So clearly they're going to be better than Google. That's been around for 2 decades. And then all of a sudden Google sold down on that news, which to me is just laughable. Someone should go play around with Comet for a while and see if people are going to get rid of Google Chrome. So I get it. Maybe it's a thing. Maybe it's not. It doesn't help them, but I thought this was kind of funny. Either way, that these names from October 10th over have been going up. If you take a look at the dollar over the same period of time, you'll start to see some of how this behavior has been going on. It's really important to get this, guys, because stabilization of the dollar is key. It's uncertainty that the markets hate. They hate uncertainty. So if you can start stabilizing, that becomes extremely attractive to the market. And that's exactly what we want to see. So we're seeing the stabilization of those names. What we're seeing is the decoupling. And by decoupling, I'm just going to show you what we're using in the community today in that list. So by decoupling, I mean ASTS was an absolute monster trade. We killed it, hits the call wall at 100, gets absolutely destroyed doing a secondary after hours. Candidly, the CFO should be canned. Why are you not doing the secondary up here? Why are you doing it down here? I mean, you're actually costing your company. This is crazy what you're costing them. You're literally costing them 30% on that money. It's crazy what they could have got that convert off of here. And I don't know, maybe pie in the sky. I don't get it, but they definitely should have done it up here. But you're seeing the implosion of these names. It's not a bad thing. To be technical about it, it truly is not a bad thing. If these start holding the 22, start going sideways, but these kind of secondary names are blowing up. And you might not think of this as blowing up, like RKLB is not that bad, but yeah, when you're on margin and you're at 100 and now you're down 30%, yeah, that position's down 60% on margin. Yeah, that's a bad day. It's a bad couple days. And we're seeing that spread. Some of this stuff never should have been where it is. IONQ, you start looking at where the revenues are. Okay, it's $100 million in revenue if you're lucky, if the wind blows the right way. People will defend this stuff. Just to be completely candid, I'm short all of this. All the quantum stuff. It's actually laughable to me at this point. But I traded it on the way up. I'll trade it on the way down. And I'll walk through some of the ways that I'm doing that. But to me, this stuff's like so overinflated. Like RGTI. I mean, guys, this thing's doing $2 million a quarter. I know you're going to tell me how it's going to reinvent the world. I'm going to tell you that I'm short. So this kind of stuff's just going to, like, the froth is going to come out of the market. And it's just going to continue to implode. When I'm shorting this stuff, I am using this. And if you're in the community, you already know this because we did it today. But I'm shorting like IONL. These things, these 2X ETFs, like these are just, they're just, it's extremely volatile. You have to be willing to deal with it. But when you start looking at like IONL versus how this is down, $20, and then you look at the same time, when you realize how these things are calculated, that your short's up 100% already. You're already up $70 on that short. It's crazy. Look at this RGTX. This thing was $498. It's $217 after hours. We started adding to this short. We were short. I was short yesterday, and then I started adding to it today in the 252, 260 range. And to me, wake me when this thing is at 50. Guys, you have to look at what you're buying. I'm going to go out there on the limb on this one, but you got to look at what you're buying. I'm going to give you an example. If you don't understand what you're buying, and if you're in the community, you already heard this because we did it with this one, MSTX. Everyone did not get this. They all think it's going to go back up. This thing will never go here again if you understand how this thing's calculated. Remember, MSTR is at 300. It's right where it closed, right? And yet MSTX, which is a 2X ETF, if I go back and take a look at this, you're right in here at 50. It's at 17. Okay, you have to look at the expense ratios and how they're getting to that 2X because it bleeds every single day, time decay. All those names do. That's why they're better short vehicles, in my opinion. You should do what you're comfortable with. QBTX is another one. You just went from 168 to 77. Wake me at 18. All these things will just completely, utterly implode. And I would strongly suggest that you look at them. Frankly, I'm not going to get like old man shaking his hand at the clouds. These things should never even exist. The reason that options exist is for options, to create these things as synthetics and then sell them as 2X ETFs where people think they actually own stock, I think is a huge mistake. I actually think it's a massive problem waiting to happen. So we're seeing this kind of stuff. After hours, there's definitely some earnings names that you guys have to be aware of. Number one, now earnings on the week, you have a bunch of them clearly. What we're obviously going to do is just tonight focus on that. But you're up over $100 on this, and you're getting these double beats and guidances are up. After hours, you're getting a complete implosion of Netflix. We're going to get into that in a little bit. Texas, we're not going to really cover or spend that much time on. It shouldn't really be that surprising. Analog's a mess. Analog's super hard to understand, and we should really spend some time there. But I do want to focus on this ISRG because this was a really simple thing to trade after hours. A lot of these things were super easy after hours. So in regards to the ISRG, once you see that information, I tend to put out there in the market. Let me see if I can, hold on. Let me see, just grab a couple screenshots. These are screenshots in the community so you can see what we're actually doing after hours. There's the timestamp. And so I'm just going to screenshot it. So we went long Netflix on the dip. I shorted ASTS on the secondary. Netflix moved fast. The secondary timing was awful. ISRG beat by 20%. And then you can start seeing it. As soon as we bounced off of this, I actually started trimming into this. I'm going to start doing lives again because I got asked to start showing more live trades. So we're going to start doing that again and more of the trading journal. And then when it started to roll over and break on that 1180, I got out of it. And I can show you that in a chart in a second. But the ASTS seems to be holding that 72. There's a put wall there. I don't know that it should be down 100 points on Netflix, but Netflix looks like it's going to have some problems. And looking at it right now, doesn't look like that conference call is going well. But ISRG crushed. And what we did was actually... Well, what I did was I actually bought that third bar. It's a 3-bar pattern. By the time I got in, because they move these markets so fast, so you have to size accordingly, and then you're scaling out as it goes up, and then you start moving the stop up. And I trimmed a lot on these pops. Like I trim a lot on those pops, and then I just move the stop up. And then on these 1-minute bars, I just keep moving it up over and over and over again. You'll see it. I'll just keep moving it up over and over until they stop me out of the rest. I don't want to tell it where it's going. I want it to tell me where it's going, if that makes sense to you. 560 became the stop, and by the time I was able to get out, it was like 558. So, but after hours it's pretty aggressive right now, guys. I'll show you a couple things. Again, if you are trying to get into the community, please look for an invite if you're on the wait list. If you're trying to get on the wait list, link in description, and I do pin it as well in the comment section. So, but if you look at this ISRG, they crushed. They absolutely crushed, took numbers up. It's good for this. It's up 100, down 100 every earnings. It's crazy how this thing moves. But you got to get out when the getting's good. So when you're popping into this stuff, all I'm doing is just waiting. And then when I see like this kind of stuff, it's just boom, right into it, put the stop right behind it. Does it again, trim, put the stop right behind it, again, trim. Because these moves are like, these are not small moves, guys. This is a 1-minute chart, and trading after hours, I do agree. It's not for the faint of heart, and it's certainly not for beginners, but you're having $14, $15 moves here. If you look at in 3 minutes, we went up 3 minutes, we're up 30 points. Like it's not a small move, and it's a $500 stock, sure, but that's still 6%. In 3 3 minutes. So I do like playing the after hours, but you need to know the fundamentals. And I do tend to go through that with the guys and girls before we get involved in the names. I do want to say this about Netflix. I don't think it's going to make it, just by looking at this candidly, I don't think it makes it till tomorrow. To me, it looks like it's going to absolutely implode here. And I've not listened to the call, but whatever he's saying on the call, man, they better put somebody else on that call because it's not going well right now. So definitely something that I need to watch here and pay attention to, but that could keep dropping. That could be a real problem for them. So you're going to want to watch this tonight. I'll tell you right now, if you crack that level, you're going to have a real problem. ASTS, to me, this was just the kiss of death. You're doing a secondary when you should have been doing it a lot higher than where you did it. That's not really what you should be looking for. Now, finally, to go through this, WAL, I actually have a position in this from the other day. And when Zion, I walk through this for you guys on Saturdays. That's why I always say, watch these videos. They're all linked. But if Zion was good, which it was, then you knew Wall was going to be good because they had the same debt issue. And so you're coming into today, stock's up $3 and people are like shocked making that Pikachu face. I mean, it was pretty clear. They outlined the whole thing for you yesterday and they actually outlined it on Friday. And now we can see that move. It's always funny when you see these moves after the fact. You always feel like you should have made more money. That hasn't gone away after 27 years. If you're waiting for that feeling to go away, yeah, it doesn't. Tesla's coming up tomorrow, and that's obviously going to be the big one. What I would really see is how do they digest these moves tomorrow? In other words, how are these moves really digesting? Are they doing everything that they're supposed to do? Are they having follow through on the downside? Are they buying the dip? You're going to want to watch this very, very closely and really assess what you're saying, because what I saw today was rotation. The same rotation we talked about in yesterday's video, we're seeing a follow through of that. Also, I don't know, no one's going to just bang a bell or ring a bell or anything, but when a company is out there and it's turning down $24 in cash to be bought, the buyer, the guy that's trying to do the acquisition usually doesn't walk away. So you might want to take a look at that WBD and do your own due diligence on this one. That's it.